A 22-year-old roof can cost you your home insurance policy entirely, even if you've never filed a single claim. Most homeowners don't know that, and they don't find out until they open a non-renewal notice. I've spent nearly a decade as an insurance underwriting analyst in the Canadian insurance industry. I've reviewed thousands of residential files, and I've seen exactly which properties get flagged. 6 things: roof age, electrical systems, plumbing materials, heating setups, liability features, and a 6th factor that has nothing to do with the physical condition of your property at all. And it's the one that catches most homeowners completely off guard. And one of these 6 can get your policy cancelled instantly. Even if everything else looks fine, I'll show you exactly which one. By the end of this video, you'll know all 6 and what to do about each of them before your next renewal. Let's get into it. Let me give you the full picture of how this actually works, because understanding why these 6 factors matter is what separates homeowners who get blindsided from homeowners who never do. When your insurer looks at your property, they are not asking, "Is this a nice home?" They are asking one question: what is the probability this property generates a claim in the next 12 months that costs more than the premium it generates? Every one of the 6 factors I'm about to walk you through moves that probability calculation in the wrong direction. Some move it a little, some move it a lot. And when multiple factors stack together, the math changes faster than most homeowners expect. When your policy comes up for renewal, the insurer runs your property through an underwriting assessment. It looks at your claims history, your property characteristics, and your location. That assessment determines whether you get insured, at what price, and on what terms. Most of the time, this process is invisible. Your renewal arrives, you pay the premium, you move on. But when the assessment comes back with red flags mean higher premiums. Multiple red flags mean non-renewal. The 6 things I'm about to walk you through are the most common red flags in Canadian residential underwriting, and the 6th one surprises homeowners most because it has nothing to do with the physical condition of the property at all. I'll get to that in a moment. The roof is the single most scrutinized component of any residential property in underwriting. It's the primary barrier between the structure and weather-related damage, the leading cause of home insurance claims in Canada. The threshold most insurers use is 20 years. A roof over 20 years triggers automatic review. Some insurers draw the line at 15 years for certain materials. And it's not just age. Missing shingles, granule loss, sagging sections, moss growth, any of these flag a property, even if the roof is relatively recent. What you can do, if your roof is approaching 15 to 20 years, get a licensed contractor to inspect it. A written condition report goes a long way. Replacing the roof is almost always cheaper over a 10-year horizon than the compounding premium increases a flagged roof will generate. There is one more thing about roof condition that most brokers won't tell you unless you ask. If you have replaced your roof in the last 2 years and your insurer doesn't know about it, they are still pricing you as if the old roof is there. Property improvements do not automatically flow into an underwriting file. You have to push them in. Call your broker, tell them the roof was replaced, get the contractor's certificate into the file. That single conversation can change your renewal outcome entirely. Now, here is the part most homeowners never find out until it's too late. 3 electrical configurations make underwriters uncomfortable. Knob and tube wiring, found in homes built before 1950, lacks a ground wire, degrades over time, and is a known fire risk. Many insurers won't write new policies on properties with active knob and tube wiring at all. Aluminum wiring, common in homes built in the 1960s and 70s, expands and contracts differently than copper, can loosen connections, and carries elevated fire risk. And undersized panels, 60 amp or 100 amp, in homes that now carry significantly higher electrical loads than when they were built. What you can do: have a licensed electrician inspect your panel and wiring. Document the assessment. If you have knob and tube or aluminum wiring, get quotes for remediation. Water damage is the most expensive category of residential insurance claims in Canada. The two plumbing materials that generate the most concern are galvanized steel, found in homes built before the 1960s, which corrodes from the inside until it fails, and polybutylene, used from the late 1970s through the mid-1990s, which degrades from contact with chlorine in municipal water supplies, causing microfractures and eventual pipe failure. What you can do: know what your pipes are made of. If your home was built when these materials were common, have a plumber inspect the system. Replacement with copper or PEX eliminates the underwriting concern entirely. An above-ground oil tank over 25 years old is a liability exposure many insurers simply won't take. Below-ground oil tanks, even decommissioned ones, create potential environmental contamination liability that changes the risk profile of the entire property. What you can do: know your oil tank's age and condition. Above-ground tanks over 25 years should be replaced. If you have a decommissioned below-ground tank, get documentation of proper decommissioning from a licensed contractor. Swimming pools without proper fencing, trampolines, and certain dog breeds generate more liability claims per property than almost any other features. Overhanging trees near the roofline in poor health are also flagged. A tree that falls generates both a structural claim and a potential liability claim if it hits a neighbor's property. What you can do: pools require compliant fencing. It's both a legal requirement in most Ontario municipalities and an insurance requirement. For trampolines, ask your insurer about coverage explicitly. Some exclude it entirely. And here is the sixth factor I mentioned at the start, the one that surprises homeowners most because it has nothing to do with the physical condition of your property. It's your claims history. 2 or more claims in 6 years triggers review. 3 or more in 6 years, combined with any of the 5 physical risk factors above, puts you at serious non-renewal risk. The underwriting math doesn't add these factors, it multiplies them. Each additional risk signal narrows the range of outcomes the insurer will accept. That's why the goal is to keep as many of these off your file as possible, not just the ones that feel urgent. Here is the most important reframe I can give you from nearly a decade of reviewing these files. Your property is not just your home. In the insurer's system, it is a file. That file has a risk score, and that risk score determines everything: whether you get coverage at what price and whether you get renewed. Most homeowners never see that file. They never think about it. They pay their premium and assume everything is fine. The homeowners who consistently get better outcomes are the ones who treat their property the way an underwriter does. They know their file, they manage it, they update it when something changes. That is the mindset shift this video is designed to give you. Step 1. Audit your own property against these 6 factors: roof age, electrical system type, plumbing material, heating setup, liability features, claims history. If you don't know the answers, find out. Your home inspection report from purchase is a starting point. A licensed home inspector can fill in the gaps for a few $100s. Money well spent if it surfaces a risk factor before your insurer's inspection does. Step 2. Address the highest concern items proactively. Knob and tube wiring and oil tanks over 25 years are the two items that most often result in policies not being written at all. Those come first. Roof condition is the most common driver of premium increases. If your roof is approaching 20 years, get the inspection done this year. Step 3. Document every improvement. Every time you remediate a risk factor, new roof, updated electrical, replaced plumbing, oil tank removal, keep the invoice and contractor's certificate. This is what you give your broker when you ask for a premium review. Documented improvements get you better prices. Step 4. Compare rates after any major improvement. Your existing insurer may not automatically reflect the improvement in your premium. A comparison takes 3 minutes and could save you several $100s a year. That's the full list: roof age and condition, electrical systems, plumbing materials, heating setups, liability features, and claims history pattern. These 6 factors account for the majority of residential underwriting flags in Canada. Each one maps directly to a category of claims that insurers pay out regularly. The homeowners who consistently get better rates and smoother renewals are the ones who treat their property as an underwriting file, not just a home. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade of working inside the Canadian insurance industry. I've put a link in the description to compare home insurance rates from multiple Canadian providers. If you've recently made improvements to your property, it's worth checking whether those improvements are reflected in what you're currently paying. And if you missed the earlier videos in this series, I've covered how insurers price your premium, when to file a claim, and how non-renewals actually work. All 3 are linked at the end of this video. See you next week.